Hello, ladies and gentlemen, and welcome from London, where I no longer am. Actually, today's whole show is a little bit of an interesting mirage in many ways. It's a recording. A couple of weeks ago, as you know, I was in Nairobi, and I was delighted to give a keynote speech to the fabulous AFM Emerging Exchanges Market Conference hosted by the Nairobi Securities Exchange. Rather than bring you that speech, what happened was that we recorded another version of the speech. It's slightly longer, it's got a few more details, but I thought you might find it nonetheless quite intriguing to watch. And of course, as always, ladies and gentlemen, all feedback will be very, very welcome as I talk about the New World Order and what's really happening in what is an incredible moment of opportunity for our great planet. So, ladies and gentlemen, without further ado, let's get this IPO-VID, where are we now, 172, on the road. And I will say over to a fantastic, incredible, amazing, and awesome keynote speaker, who else other than Patrick L. Young. So we're looking today at what I call the New World of Opportunity, so the New World Order. It was delivered to the Association of Futures Markets at the AFM's 27th annual conference on Friday, 14th of February in the JW Marriott Hotel in Nairobi, Canada. No, let's start again, in Nairobi, Kenya even. So what's the core message we want to take away from this, ladies and gentlemen? Whether you're the emerging markets, wherever you are in the world, I want you to succeed, because ultimately I'm pro-pie. I'm pro-pie and pro-eating it, or pro-cake and pro-eating it, but most importantly, I'm pro-growing the cake that you want to be a part of, so that we all have a larger pie to enjoy wherever we are in the world. And I'm going to say, since I was last at this conference, I had the wonderful opportunity to enjoy something that was strictly in best day ever territory. I called it the revolution, T plus 9,137 days later. That was the period of time since the publication of Capital Market Revolution, my original book, published by Financial Times Prentice Hall on July the 1st, 1999. And I had the joy with this wonderful lady here in the cream jacket, just to the right in the picture of me on the dais. She's applauding, standing behind the copy of the original book, the original first edition, in fact, of Capital Market Revolution, because that is Lynn Martin. She's now the president of the New York Stock Exchange. Very early in her career, she was a reader, an avid reader of Capital Market Revolution from her first job at the Life Exchange, where she worked in the New York office. And it was absolutely marvelous that she invited me to come to the New York Stock Exchange and deliver a fantastic opportunity, the chance to ring the bell. And in fact, it was quite incredible, because last year was quite tumultuous for ringing the bell. I got there before a certain Donald J. Trump, who was at the end of the year, and even a few months before President Milei of Argentina. And I've still managed to beat the great basketball player Caitlin Clark, who I suspect will be there sometime in the near future. Interesting fun fact to throw in here actually is that the ringing of the bell, the opening and the closing bell on the New York Stock Exchange every day, is watched on television around the world by no less than 120 million people. Now, if you want to put that in perspective, that's actually essentially the same number of people as watch the Super Bowl in America every year, and everybody gets into a super frenzy and they sell wildly expensive ad slots for it and so on. And in fact, to be also clear, the Super Bowl has now finally managed to make it possibly just past the NYSE. It hit about 126 million viewers in what was a record year during the course of 2025. This brings us to, well, one of my most famous, I suppose, quotation, because it's in a lot of different quotation books and lists around the internet. The trouble with weather forecasting is that it's right too often for us to ignore it and wrong too often for us to rely on it. This builds on two or three things. It builds on my different keynotes to the AFM, for example, London 2022, Dubai in 2023, and also indeed last year, the 26th annual meeting in Bangkok in Thailand. However, it's intriguing because here's a quotation that its time may have actually come. Nonetheless, I would like to point out it's an interesting little aside in terms of globalization. At the AFM conference, we have the joy of our new member being NASDAQ, and it was represented by Michelle Carlson. And in fact, Michelle took this quotation and used it in a presentation in Dubai last year. And she used that presentation. The quotation was used in a presentation talking to the Irish Dubai Chamber of Commerce. So there we had the wonders of globalization writ large. Someone who was actually born in Syria, who's lived all around the world, nowadays is based in the UAE, happens to be working for a global company like NASDAQ with offices all around the world. And at the same time, she was addressing the Irish Chamber of Commerce, which is obviously close to my heart, PLY, having been born in Belfast, in the island of Ireland. The one thing I've got to say, though, about the trouble with weather forecasting is that it's right too often for us to ignore it and wrong too often for us to rely on it, is finally, perhaps, this may be a quotation whose time has not merely come, but is passing. Because what we noticed in the course of the last year or so, and this has obviously been a prevailing trend for everybody interested in financial markets and investment, is that AI, specifically Google AI in this case, they reckon their weather AI is now something like 80% accurate in predicting the weather. So perhaps the trouble with weather forecasting in the future will be much less significant, and my quotation can be happily retired to the dustbin of history for the perspective of people who think, gosh, who on earth could have lived in a world where weather could not be forecasted almost perfectly? Now, when we look at this whole issue of where we are in the world, I think it's very, very important to sit and look at the great key power blocks in the world. So if we look at the USA, we look at China, it's two sides of the same coin. Huge amounts of money going into developing artificial intelligence, technology, innovation at the epicenter of those economies. True, the world is moving very, very fast. So in the run up to February the 14th, that ChatGPT, which looked to have a huge moat around it as a piece of artificial intelligence, has suddenly been somewhat wiped away. Isn't that incredible, ladies and gentlemen, that we can look at that piece of technology and see that it's entirely different the world over compared to where it was? It seemed to be reigning supreme. And then a group of Renaissance geniuses in China came out with DeepSeek. Doesn't need to have the same degree of sophisticated product chip. It can power itself off normal computing. It's still a very, very incredibly powerful device, but nonetheless, what we see is the AI revolution. I would say the machine learning and AI revolution is moving apace. And as that moves apace, it becomes very, very exciting, because what we're looking at here, ladies and gentlemen, is two massive innovative power blocks. Neither one nor the other has won the game yet, and indeed neither may win the game in the ultimate case. But then we have a third power block, the European Union. How's the European Union doing? Cradle of so much of Western history as a whole. Well, they're not really there in AI. Actually, what they've done is regulated AI to the point where it's effectively impossible to actually innovate AI and develop it, because you'll have so many liabilities and that will be a crisis. Instead, they've brought out regulations that mean that all the water bottles that you actually get in the European Union now have this really, really annoying cap that you can't actually unscrew and take away. So the European Union is thus bracening its cheeks of the citizens. It's overall scratching everyone, but not actually working towards an innovative dynamic. Fun fact. The bottle that we're looking at here is actually produced in Uganda for export to the European Union market. So the European Union isn't even managing to dominate production of the items that it itself is dictating that its citizens must use. And that's a really sad impact, because what we're talking about here, ladies and gentlemen, is a situation where the European Union really is being passed by. And in order to put that into perspective, I think it's very important to say, look, when it comes to the economy, I mean, if we look the whole nature of what is going on right now in the European Union, it is a shocking statistic. Essentially, apart from Ireland, which benefits from a huge amount of wondrous corporate sharing of profits. I mean, essentially, you've got companies like Apple, for example, amongst other American titans, who are saying that all their operations are based out of Ireland, and therefore that's where they're taxed, and therefore they get a huge tax arbitrage because they're only paying 10, 12, 13% in the Irish Republic, as opposed to what they would be paying in the USA, which could be 30 or more percent under the Biden-Brezhnev regime. Every other nation in Europe, okay, is struggling to have an economy as large on a GDP per head basis as West Virginia. West Virginia is the 50th of 51 US states in terms of overall size of economy, GDP per head. In fact, it gets worse because really only the UK, Germany, and a couple of other economies at most are even in that league between the 50th and the 51st state. Most of the nations of the European Union, including even some quite large ones such as Italy, their GDP per capita is significantly less than the poorest state in the United States of America, Mississippi. Now, that's not to deprecate Mississippi. In fact, that's to show just what an incredible economic powerhouse the United States of America is. And that's why when we're looking at what's happening here, it's a whole new world order. Going back to the AI point, I think it's very important to look as well at when we're thinking about the USA, when we're thinking about China and how they're growing ahead, look at this as a pattern of innovation. Why is the US leading in so much technology? Well, here we can see it writ large in the number of data centers. Absolutely astounding. 5,381 data centers are in the United States of America. The United States of America pretty much has an overall majority of all data centers in the entire world across, depending on what you want to describe it, 190, 200 countries or 220 something territories, some of which aren't recognized by the United Nations. It's nonetheless an absolutely staggering number. Of course, China comes in fourth place. Fair point. I think it is something, and we will look at this in the future. What's the total GPU? What's the total processing power? It's very, very reasonable to say that in the United States of America, we have a problem because the issue there is the data centers are much, much smaller. So it's not a problem per se. It's still allowing huge amounts of dynamic development. But I think you'll find that China on circa 500 data centers, the average size of the data center in China is vastly larger, which therefore I'm sure makes it much more productive, and it has a great deal more processing power than Germany or the UK, which are obviously going to be relatively geographically limited in terms of how many data centers they can develop in the future compared to the likes of Germany and the UK. Now, at the same time, that leads to some quite interesting thoughts as we're going along, because when you're looking at data centers, we have to think about it in relation to how the US data center market has grown up. And I see trouble ahead for that small town in the world, which lots of people in financial markets have heard of, but almost nobody outside of financial markets has ever heard of, which is Mahwah, New Jersey. Now, Mahwah, New Jersey is the place where essentially pretty much all of the world's stock market and derivatives trades that are based out of the USA are happening. The difficulty is that Mahwah is geographically fairly petite, sitting as it is in that top northeastern corner of the United States of America, which is already pretty cramped in terms of the overall level of population density. But at the same time, what's fascinating about Mahwah is that they're close to running out of electricity. They're actually at the point where they could be on the cusp of not having enough electricity to power the homes of the kind of people who are actually running the data centers, let alone other people who are in Mahwah, New Jersey, who are commuting, for example, into Manhattan to work on Wall Street. So what's going to happen there? I suspect we're going to be seeing a very, very significant transition in terms of what's going on in this marketplace, because I suspect ultimately US data centers are going to start getting bigger overall on average, and they're also probably going to move west, and they're likely to work their way towards somewhere like, say, Texas, where there's a great deal of land mass, which will allow them to have an opportunity. Now, that leads us, of course, to another additional problem, because the difficulty you've got there is, yes, they have land mass, but at the moment there's a significant issue with actually the grid in Texas, which may not be able to survive at extreme weather moments. And indeed, we've had more than a couple of major freezes, flooding events, and so on in the course of the last year or two, as well as extreme heat, all of which have caused problems on the grid in Texas. However, I'm sure they're going to get over that. And I'll also offer you one fascinating piece of development. Of course, the history of financial markets, as we know only too well from indeed the most recent IFM Tech Day, has been talking about how technology has moved into data centers after a great deal of it was on premises, on-prem. Maybe we're going to even see a reversal of that. Why would that be? Well, actually, it may not be that the data center itself has to move, but it may be that the power for the data center comes from somewhere entirely different, because we're on the cusp of developing right now. The technology is there. It's being beta tested around the world in many different environs. And that is actually a film that goes on the outsides of buildings. And of course, once you put it onto a skyscraper, that has a huge multiplicative effect for everybody. Those films can actually deliver the electricity to power the buildings themselves with the surplus. So if you think about that, if we can start building those buildings, or at least adding that film to the outside of those buildings in the near future, that's probably going to solve a great deal of our power problem throughout the world, anywhere where effectively we've got large, dense cities that sit in a reasonable amount of sunlight at some point in time, and therefore going to give a huge opportunity for everybody to have bounteous power. And that, of course, might actually have an afterthought, which I'll come to slightly later in the presentation. If power buildings really take off, which I think confidently we can assert they are going to be, and it's also going to have a revolutionizing effect upon emerging markets, other places that don't have such a sophisticated grid or such sophisticated grid capacity. And it could, of course, be the fascinating final end link to, for example, African data centers, where we know that a great deal of African data centers have actually been built without being based upon connectivity of T1 telephone lines to the outside world. They've been built on the core concept of connectivity, which is going up, aka they build the data centers underneath the huge pylons, which are themselves linking to the satellites around the world and allowing therefore mobile and satellite telephony to go straight into the data center, which has been such a revolutionizing factor for Africa, and indeed enabling the opportunity for the likes of M-Pesa to deliver online payments to everybody with a mobile phone throughout Kenya and beyond. I mentioned before that we were looking at a new world order, and if we look at that new world order, it's quite fascinating. Whether you like it or you don't like it, the simple truth is the MAGA, the Make America Great Again, Trump USA is dominating the market agenda. What we've seen in the new Trump regime is a very, very different POTUS 47 administration to POTUS 45. Execution of forethought, bringing in incredible talent into that overall marketplace, displaying incredible possibilities for what's going to happen. Because let's face it, if you don't think Trump delivers or is indeed dominating the world market agenda or the world agenda right now, you clearly haven't opened a newspaper, because nobody can talk about anything except Trump, Doge, Musk, all people who are within the administration. And here I have to offer a wondrous footnote, because we have a couple of fantastic former exchange or exchange-related parishioners who are in the administration. The Trade Secretary, Howard Lutnick, definitely the person I think the US wants to have on their side for any discussion, argument, and debate. He's going to be an incredible advocate for the USA. And equally, we've got the fabulous Kelly Loeffler, one-time senator of the USA, but before she went into politics, of course, don't forget, she was a highly capable CEO of BACT and an integral part of the team that built Jeff Sprecker's Intercontinental Exchange into being the top of Young's pyramid of exchanges. So therefore, I mean, that execution momentum becomes very, very important, because the US's influence is increasing. Good grief, let's face it, we've just seen a trade war being won by President Trump against Colombia, which was actually a godsend. I mean, the president of Colombia actually was rather foolish to take Trump on in the way he did, because ultimately, I think it's the first time in history we've seen a sitting president of any nation in the world win a trade war somewhere between the first and sixth holes of their golf round of a weekend. I mean, Trump didn't even have to return to his office in order to manage to participate or win that particular trade war, which is quite sensational. Again, we go back to this issue of the EU is in marked decline. And I have to say, I do worry about the cohesiveness of the BRICS. Now, there's a fantastic IPO-VID out there with Kathleen Tyson, which discusses the whole idea of multi-currency mercantilism. And that may well work. I mean, that may well come through and be a brilliant system that functions. But I still have a fundamental issue, because I think, if nothing else, the BRICS don't really share a particular ideology. There's too much competition within them. They may be able to develop greater bilateral trade, but I'm not entirely convinced. I'm certainly not convinced at the moment that the BRICS are going to be this incredible momentum that comes up. The simple truth of the matter is, ladies and gentlemen, US dollar centricity continues, and we'll get back to that in a few moments. So therefore, I think the other things that are fascinating about this new world order, and they will impact markets, markets, however they play out, and whether you agree with Trump or you don't agree with Trump, Trump is willing to rethink the dysfunctional status quo. Now, that may be chaotic on the ground in the likes of Kenya and Africa with the closure of US aid programs, but at the same time, it is something where he's really thinking hard about what goes on. The whole concept of what he's looking to do in Gaza seems absolutely incredible, but nonetheless, he's willing to rethink what effectively have been 30, 40, 50-year problems that simply have not been improved, no matter how much money is thrown at them under the status quo. At the same time, I think when it comes to his trade war approach, you have to consider the fact of, is he making debating points? Is he making deals? I suspect there is at any point in time a reasonable way forward, but simply Trump wants to make sure that the USA gets a better deal out of what's been going on. At the same time, there's a lot of political upheaval coming in the UK and the European Union. We see a UK government only elected last July the 4th. They're already broadly discredited and actually imploding. They maintain a huge majority in Parliament. I'll be very, very surprised to see Prime Minister Keir Starmer, however, surviving as the leader of what is an increasingly fractious bunch under pressure. They're third in the opinion polls in the UK already after barely any honeymoon period and only 7-8 months after they actually took office. At the same time, the European Union, with a huge number of elections looming, I think rather than going through the elections in Europe, which maybe is a cause for a whole different topic and discussion another time, perhaps we can get a fine expert to help talk about that with us. We've also got this incredible situation that actually political stability on the European continental landmass is now represented by Giorgia Meloni, the Prime Minister of Italy. And she looks to be the one person who will go full term. And who knows, her popularity is such she might even be able to get a second term, which is pretty much not what can be said of any other major European government at the moment. Indeed, some of them are essentially walking dead regimes, ergo Spain and indeed Germany, where an election is being called and the sitting government is going to be annihilated in the course of the next few weeks. So at the same time, the US opposition at the moment is somewhat muted. There are a lot of never-Trumpers out there who are screaming and yelling, but I don't think they've actually got a way forward, even though Trump's actual congressional majority is sitting only on a knife edge of a couple or 3 seats, and that may actually go down to 2 seats in the near future because he's nominated one congresswoman in order to join his cabinet. But we shall see. However, Doge writes out in 4 letters what is a big blob crisis. And that's something that we have to look forward to as being a massive war on government waste. And it's something, again, Trump rethinking problems out of the box that we have not seen from previous administrations around the world, which is very, very different. And certainly the execution level of the way that the Trump administration has attacked the issues that it wants to improve the world around is very, very different to what we had previously. Now, when we look, of course, at Young's pyramid of exchanges, that leads us into a fascinating dichotomy. As you'll recall, I created this in order to illustrate the relative size of the working organizations in the world. The most important thing remains from the overall perspective of the AFM's membership and emerging exchanges around the world. And I'm delighted to say that I'm always free to play an active role in building more of these exchanges, because the truth is this pyramid is growing. Tier 3, we're seeing unprecedented numbers of new markets growing. It's a joy to see so many young markets that are around the floor, and we're around the convention of the AFM conference, and they are growing and building, and there is a huge market. This, ladies and gentlemen, is the age of the exchange. This is the era at which exchanges become so much more interesting, so fascinating in terms of their ability, because remember, exchanges, as I said before, in Bangkok in particular last year, are the epicentral model of e-commerce. That cannot be avoided. Airbnb and Uber may not be regulated at the same time and same way as securities exchanges or even commodity exchanges are, but the simple truth of the matter is we have an incredible opportunity right now in order to manage to develop that marketplace going forward, and all marketplaces around the world. Although at the same time, we doff our hats to those who sit in the top tier of exchanges. Hong Kong Exchanges, the London Stock Exchange Group, albeit now predominantly a data provider rather than exchange business, the CME Group, the world's largest single-purpose futures exchange, and the Intercontinental Exchange, the biggest of them all. I mean, it's just under $100 billion, somewhere about $96 billion last time I looked. An amazing, vast department store. Yes, there are huge arms of data, but it does everything. Equities, bonds, derivatives, and of course owns that eponymous, incredible business that gets 120 million television views every day for its campanology, the New York Stock Exchange. So therefore, again, I cannot emphasize enough, we must remember that exchanges are at the epicenter of e-commerce and at the epicenter of commerce, as well as being the modern online e-commerce model as a business. Now, of course, what we're looking at, and something that's very key, we used that in the workshop building exercise the other day and going forward, the key exchange pillars. We need to have trust, we need to have a network, we need to have power, and ideally we need to have that wall of money that comes into the market in order to bring that marketplace alive. And I think one of the most interesting debates we see around the AFM is how we can manage to effectively nurture that wall of money in order to go forward. And at the same time, one of the things that's vitally important that we have is a great degree of support and understanding from our governments and regulators and so on. I don't mean that we have the government as a permanent advocate who's always right in front of the stock exchange doing everything micromanaging, but simply to have the support of government is a very, very vital facet of what we need at all points in time within our markets. When you're understanding your markets, I think it's also vitally important that we always pay attention to the granular issue, relate it back to the pyramid. Truly, many of the issues, many of the things that the Intercontinental Exchange is doing every day are very similar to what the smallest exchanges are doing in the world, but they do it at a totally different scale. The smallest exchanges in the world may only have one or two products. They're essentially small stalls, they're small shops, corner shops, if you want to refer to it, something like that. Then we go through sort of larger sized supermarkets and we end up at the likes of the Intercontinental Exchange, CME and Hong Kong exchanges, which are these vast department stores that are dealing in all manner of products, clearing, settlement, with all sorts of additional spin-off services amongst them. And that's, of course, most of the exchanges that are sitting in tiers 1 and tiers 2 of Young's pyramid. Of course, those top tier markets are all what I would call super liquid. They have a huge amount of data going through, incredible messaging traffic, millions and billions of messages per day, millions and millions of messages per second. And that's something that's very, very important to keep recalling, because that's great for that tier of marketplace. But again, it's the difference between Formula One racing cars and trucks, or the car indeed, as we're in Kenya, that's going to win the East African Safari or even finish the East African Safari, because it's a long slog in order to get there. Local markets need local solutions. As I hinted earlier, perma liquidity needs to be sourced locally as much as it can be, because that makes us less reliant in a local market on what's happening overseas and the liquidity that may be somewhat more fickle from foreign marketplaces. Equally, therefore, that means that you refer to this, what I call the wall of money, where we need local investor and participant networks. And above all else, what we have to remember when we're building markets is, at the core of a marketplace, you must have the key component entities that are interacting with that market, people who are engaging in, if it's a derivatives market, risk transfer. And in any markets, you need to have commercial participants, investors, preferably both retail and wholesale, as well as arbitrageurs. Now, the key implications for that in this great world of opportunity, which is also being enabled by what is clearly a Trump strategy of growing the global pie, albeit from an American perspective, resonating out across the world. Well, we all have to be flexible for a start. And I mean, in one way, we can think about flexibility in relation to technology. That becomes a vitally vital element to where we are at the moment. I mean, in the same way that we have super liquid and less liquid markets, and therefore we've got a haves in super liquidity terms and have-nots in terms of super liquidity terms, we need to really start thinking about where our markets are built from. For a lot of markets these days, terminals, desktops, they're not necessarily the thing that are the most important to us, nor are necessarily low latency, ultra sophisticated applications. Great in super liquid world, but not in markets that have to be more elegantly crafted and built during the course of a trading session. We've got to think more about the deployment of mobile telephony, and indeed also look at alternatives, particularly for prototyping and being as nimble as possible with the development of new markets, new products, new entities, no-code, low-code solutions, rather than having to hard code everything up front, which is hugely expensive and time-consuming. There's an incredible opportunity in there, no-code, low-code, expected to grow by, I think, 6-fold in the course of the next several years, according to various research reports. And it's a huge opportunity for every kind of exchange and marketplace to deploy these sorts of opportunities to develop and think about how we can grow markets and have a greater debate with the end user community. And that connectivity obviously becomes very, very important. Look at what's going on in the United States at the moment. You're actually seeing US exchanges, particularly in the derivatives world, creating internal bourse brokers. I mean, essentially their own brokerage arm. And I think that's a fascinating opportunity because it can really, really easily help, say, a very, very small marketplace get out to the outside world by creating its own brokerage, which can be a plug and play element to larger brokers in other regions, other countries, wherever it may be. And I wouldn't advocate that brokerage is ever going to be a key profit center for the exchange. It's an opportunity to grow your business, grow your liquidity, and encourage your network to grow, because networks are going to be key to whatever you do. And in that sense, deploying no-code, low-code, deploying a greater flexibility of management thinking allows you to get to the idea where you can be both, in some ways, bespoke, but also delivering commoditized solutions for all practitioners in your marketplace. And therefore, I mean, the next generation of exchanges, it's very, very important that we think about this. They are going to be about nurturing illiquidity, because this is a world of opportunity, ladies and gentlemen. I've talked about this before. Once upon a time, I had the joy of being on the yacht of a man whose billions, I mean, vast fortune certainly, had been delivered to him with a lovely life in Monte Carlo as a result of nothing better than, well, a functional, vital issue for all of us alive today, the manufacture of toilet paper. This is a world of opportunity, and it's very much a world of opportunity for markets. At the same time, we've got to keep thinking about this technology, because some technology stacks can be very, very old. Fortunately, there are many vendors preaching to the mass of the AFM membership who are not delivering necessarily that sort of age of technology. They got much newer stacks, and that's a great thing, because the problem is there is incumbent fintech out there that looks rather like putting lipstick onto a pig. And of course, I draw your attention to the fact that we are 25 years into the capital market revolution. There is much to be done yet, ladies and gentlemen, on that whole stake going forward. But nonetheless, this is a fascinating and exciting time, but we need to remain nimble and look at new code, new opportunities for legacy exchanges. And in one way I see this as being the opportunity to go from mainstream to mega niche. And when we talk about that, I mean, obviously the people who are at the very top of Young's pyramid, the Intercontinental Exchange and so on, they're right there in that whole amazing issue of what is mega mainstream markets. Look at the top end of New York Stock Exchange and NASDAQ, for example, with not just household name stocks, but stocks that are worth anything up to $3.5 trillion in recent weeks. And I mean, that's absolutely amazing numbers, whether it's NVIDIA or the likes of Microsoft and so on. Incredible companies like Apple, they are in a league of their own, ladies and gentlemen. Let's face it, one of those stocks, two of those stocks actually, are pretty much bigger than the entire market capitalization of every other stock exchange on earth outside the USA. One of them is larger than most of the capitalization of all of the stock markets in Europe. Incidentally, what's the difference between the US stock market and the European stock market? That's a trivial point in the way through. Essentially, it's technology. Goes back to that precautionary principle in Europe, which has ultimately killed the technology market. Freewheeling, buccaneering USA, they have two stock markets essentially within one. I don't mean NYSE and NASDAQ. They're two wonderful core stock markets there. But you have this amazing facility whereby the NYSE in itself and the NASDAQ are very, very much delivering two very significant groups of product. There's Main Street USA, normal companies, for want of a better term, very dynamic and profitable. And then there's the technology element. And that's what gives the huge cream on the incredible very, very large coffee, as we're discussing this from a Kenyan perspective, of the US stock markets. And therefore, you see in this, again, localization, mobile product development, being able to reach your customers. Remember, I was talking like a year ago, 2 years ago, a couple of times I've mentioned this. In China, the vast majority, 90% plus of people are signing up to trade on markets. They're using mobile telephony. Also interesting, though, to reflect that, I mean, a lot of people in this world think, oh my goodness, the people who are trading on the world's biggest exchanges in the world, they must also be delivering incredible amounts of hyper technology, blah, blah, blah. Well, actually, the Intercontinental Exchange, the majority of people who've been connecting to the Intercontinental Exchange over the course of a number of years, I mean, I think it's probably a decade or more, they're actually using WebIce. So WebIce is a dedicated broker solution. But it's essentially a dedicated broker solution browser that you get for effectively a negligible fee from the good folks of ICE, if not free entirely. Therefore, that's a whole different solution scale to the likes of the CQGs or the other potential terminals you can have that are much more sophisticated. A lot of people are using very large markets using relatively simple connectivity. And that should make us think about that, because when we look at what people want, well, before I talked about this also, the granularity and regionalism effect, etc. When you're looking at how the electronic era has allowed us to go to a multi-benchmark world. Look at oil futures, gas futures. We didn't even have gas futures 30 years ago. We had West Texas Intermediate. We had Brent crude. I mean, both of those are relatively sweet crudes. They're nothing like the heavy sulfuric stuff that actually comes out of the places with the most oil. But of course, the reason those benchmarks work really, really well was thanks to political stability during the course of the 1980s. I mean, if the world was going to the hell in a handbasket, the 80s or 90s, we at least felt quite confident that we would be in a situation where we wouldn't end up, whether it was in the Catskills or in the Cotswolds, knitting our own sweaters and trading tins of beans in order to eat because the Russians had invaded, because that was relatively implausible even during the 1980s that the Soviet Empire would get that far no matter what happened. And therefore, that's why we've always had an issue. But now in the digital age, you can see, and also, of course, in what has been, broadly speaking, a more peaceful age post-Soviet Empire decline, there is this huge opportunity for multiple benchmarks to be grown across digital markets. And that's great because it also really helps with niche agricultural product as well as niche indices and all sorts of other issues around the world, which is giving us, therefore, that granularity, the opportunity to find your micro niche wherever you might be. And when you think about digital technology and micro niches, I mean, nothing better than probably something like chess.com. Who would have thought it, ladies and gentlemen? I mean, chess, the most nerdy imaginable sport we could think of. It's now turned into a massive business, bigger than it's ever been before, where in the 60s, 70s, 80s, it was this huge power play between the United States Empire and the Russian Empire over who was going to be the greatest. Not only do we manage to have an incredibly young Indian world champion, as far as I recall, but actually we've got this amazing network of people playing chess around the world thanks to an app called chess.com. And if you want to put that in perspective, well, when the chess.com every day, they reset and they do effectively a daily puzzle. That daily puzzle is solved every day by millions of people. There are actually chess influencers who are now making a living off Instagram, social media, and so on. So no niche is too micro for you to be in. No niche is too nerdy to be in. They can all be within social media. And there are all sorts of opportunities for the trading of product within that. It almost makes you think that, gosh, you know, blockchain, distributed ledger, and DeFi, maybe they're not actually entirely the future that they might be being touted to be by everybody. Certainly, it's very, very difficult to support decentralized finance, DeFi, because that's simply not something that sits compatible to the centralized nature of regulation and rules and law. And therefore, I still have a fundamental problem that, well, DeFi can work really, really beautifully, or at least decentralization can work really, really beautifully for all sorts of manners of the human condition. Actually, decentralizing finance, I still think is #it's complicated further down the road, because the people who dislike being disintermediated above all are the legal profession. At the same time, I mean, there's much discussion going on around about new product the world over, emissions, prediction, all those sorts of things. And that becomes fascinating altogether, because There are huge opportunities out there in all of those markets. I was a co-founder of one of the original groundbreaking prediction markets in trade sports all the way back 25 years ago. I was advocating for these markets, 30 years ago almost on the interweb, that brand new buzzy thing that we had way back then in the mid 1990s. Huge opportunities. And the huge opportunity there is obviously when you look at the percentage engagement of people, as I was discussing at the workshop just the other day, for what's going on. And of course, the ability to make markets on more or less everything in a digital age, which allows us these vast product swathes and all of the sort of opportunities that you can see. Back to another fabulous micro niche. Well, here's a micro niche with a micro niche attached. So on one side of the screen, you can see the cover of a book. I happen to pick it up because it's in the lounge of the Renaissance Hotel in Warsaw Airport. Just the other day, I was flicking through it. And what's fabulous is now there, for a Nairobi context, given that Nairobi, Kenya, and when I was a little boy in the 1970s, I loved nothing better than waiting 4-6 weeks for the monthly copy of Motorsport to arrive and be published, and we could read all about what had gone on the safari, the East African Safari Rally, the most glamorous, incredible rally that the world had ever seen, something which actually also was a great byproduct of the wonderful reign of Queen Elizabeth II, who, of course, actually was taken from Kenya in order to go and become queen when her father met his untimely demise. And I mean, what a mega niche. This is a book called Poles on the Safari Rally. That's it, ladies and gentlemen. That is a book just talking about the group of Polish people who went and did the Safari Rally. More significantly, you might think, gosh, that's a bit loopy. I mean, given the fact that actually originally the Poles who did the Safari Rally were under communism, so it was quite difficult for them to get out there. More incredibly still, there was a man, Sobiesław Zasada, and he managed to do the East African Safari Rally in this beautiful Porsche that you can see here. It's sitting restored at the Amelia Island Concourse a number of years ago. And that car finished 5th on the East African Safari. Now, here's a niche of a niche. I know that we've just recreated the East African Safari. It's back on the calendar, which is absolutely fabulous news after far too long of an absence from world rallying. But also then there is the whole area of historic rallying. And that's a fascinating area with investors, with all manner of people around the world, including myself as a sometime commentator on historic motorsport around the world. And indeed, there's a final fascinating loop to this. This beautiful 2.4 litre Porsche 911 SC is actually owned by a personality who works in the exchange business. So if you get your micro niche back, you can end up in a mega multilateral business around the world, and you too can own these exquisite rally cars. So that gets us to the future of money. And I mean, I think it's very important to think about the future of money here, because where we've got essentially an opportunity to make markets great again, you've also got the US MAGA establishment driving forward this whole new, brave new world of execution. And what that means in one sense is that, well, financially, the dollar is going to reign supreme. And actually, when you think about it, it's quite ridiculous, because in the entirety of my adult life, even when I was reading those fabulous articles, or actually glancing at the pictures, because I probably found it quite difficult. I was so little to read the whole story in Motorsport magazine or somewhere about the East African Safari Rally in the 1970s. You had this situation where a group of detractors were saying, that's it, the end of the dollar. So we're now at the point, ladies and gentlemen, where we've had 50 years or more of people saying the dollar has peaked. Guess what? Go to the media today. You'll read a lot of stories that say, oh, the dollar has peaked. A lot more people will say the BRICS currency is coming through. I'm not sure I'm convinced of that per se. I'm equally very unconvinced by the concept of central bank digital currency. Some countries that want to really be able to control their economy, they will probably bring it in. There are certain parties in the European Union who are very eager to bring that in, and they certainly don't seem to be overly democratic, alas, these days. It may well work for somewhere like China, which is trying very, very hard to structurally control the population in many ways and control how money is spent. But I don't think central bank digital currency is going to get anywhere in whatever is amounting to the free world. At the same time, I have a huge query over what they call stable coins. I mean, stable coins, the idea of holding your money denominated in US dollars in another token on a blockchain somewhere that actually gives you a huge counterparty risk. I mean, there's a reason why we rather like holding US dollars, and that is because, of course, the US government is the biggest balance sheet you can find around. Yes, of course, they can artificially print more money to make the balance sheet up or whatever, but actually, you're pretty confident you're going to get something back on your US dollars at the end of the day. Can you be so confident that that's going to happen with the stable coin people? I'm not entirely convinced. However, I mean, going back to capital market revolution in 1999, I talked a lot then about ETUs, electronic trading units, the opportunity to park assets, to park all sorts of things in digital currencies, effectively. Important to remind you all that, of course, despite being of a certain age, I am not talking about or trying to assert the idea that I'm in any way Satoshi Nakamoto, the inventor of the Bitcoin, because that is not me, full stop, and I would never like to claim to be that. In fact, actually, when I was talking about electronic trading units, I wasn't even thinking in terms of blockchain per se, because blockchains have advantages, but they also have considerable disadvantages when it comes to how they work overall. But it's important to think about the idea of trade coinage. So maybe that is where stable coins can come in as something that momentarily exists in order to facilitate trade. Back again, actually, to a lot of what Kathleen Tyson was talking about the other day, multi-currency mercantilism. And indeed, the very first coin that was introduced around East Africa, which was a thaler, which was used for trade and transactions long ago in the era of the Austro-Hungarian Emperor Maria Theresa. And then we come to this fascinating concept, I suppose. I mentioned it earlier. I teased out the idea of power buildings and pure power money. And that is a question. Is money power or is power money? Now, this handsome gentleman here, ladies and gentlemen, in case you don't recognize him, is, and I may say his name twice just so that you can manage to catch it, Patrick Young. Yes, this is Patrick Young, ladies and gentlemen. I know we look like brothers. It's just uncanny how we look all together. I think the only disagreement we've actually ever had on meeting is that we both probably hope that if our lives are made into a biopic, that we'll be played by Denzel Washington. But other than that, we're on pretty firm territory. And indeed, Patrick's view on money, I think, is fabulous. His view on money, as he expounded on IPO-VID many months ago, was the idea that maybe the coin of the future, the money of the future, is actually to be derived from not financial terms, but from electricity, from power, whatever way you can manage to generate power. And if we go back to this idea of power buildings, if we look at the way that some networks are now being built to trade power between apartments off solar panels and different office blocks and different residential units, there is a story in there. It's quite interesting how power money could become a huge thing. And obviously, that could be a revolutionary factor for nations where they can easily generate power from solar, such as countries in Africa, and be a huge differentiating factor going forward. So that brings us to the point where we want to think about the final issues for today's discussion, today's speech. And I want to leave you with a few thoughts, okay? In 1940, 60% of current jobs didn't exist. A huge number of jobs have died out. And I'm not particularly sure that people who worked as metropolitan lamp lighters, for example, lighting the street lamps in parts of the UK, Ireland, the Americas, across Europe, etc., are necessarily enormously missed, nice and wonderful as those people may have been. But the simple truth is we have created a vast number of new types of jobs, such as influencers, in the course of the last 85 years. Now, I also want to think about, because this is against the context of, we started our workshop in Kenya on the 12th of February of this year, and we then ran the conference 13th, 14th of February. When I gave my speech on Friday the 14th, it's Black History Month. On February the 12th, 1970, Joseph Searles III made history by becoming the first Black man to be a member of the New York Stock Exchange. That shows how far we've come in many ways around the world. It also is an interesting lesson as to how far we've come in markets, because when Mr. Searles was elected a member of the New York Stock Exchange, when he went on the floor for the first time as a member on the 12th of February 1970, remember, the US dollar was essentially still on the gold standard. We hadn't seen commissions being taken away from being fixed commissions on the New York Stock Exchange or any other stock exchange around at that point in time. We had a situation where the whole derivatives revolution was only in its infancy and about to take place in the near future. And that, ladies and gentlemen, is why it's important to take away this final thought. In 1970, 90% plus of current markets were not traded. They didn't exist. And yet, ladies and gentlemen, whatever you think of MAGA, whatever you think of the reshaping of the world, the simplicity, the simple fact we have to take away today is 90% plus markets may be new in the course of the last 55 years, but yet we're still only at the early stages of exploiting the core model of e-commerce, the model of the marketplace, the model of the exchange. Of course, I invite you to pick up any of my books if you would like to have a read of further things. Capital Market Revolution 25th Anniversary Edition is available online as a download from Kindle. You can pick up the other books. If you're going to pick up the 25th anniversary of Capital Market Revolution, you don't need a copy of Capital Market Revolution, but do think about buying a copy of Victory or Death or the Exchange Manifesto, and you can hook up with us on all manners of different social media over time. Thank you very much, ladies and gentlemen, and I wish you a great day in life and markets. Well, and there you have it, ladies and gentlemen, a speech delivered on Valentine's Day, February the 14th. If you're interested, incidentally, in hiring my services, I'm very happy to chair your conference, or indeed come along and give an equivalent keynote speech about whatever topic you would be interested in related to the future of finance, the building of marketplaces, the opportunities throughout this incredible, amazing world in which we inhabit. Let me also add, of course, that no IPO-VID would be complete without, first of all, a book of the week. And this week's book of the week is Emmanuel Derman's absolutely marvelous tome, My Life as a Quant. It was a thrilling read, one of the very, very first pointy-headed super scientists. He was, actually, to be quite precise, Emmanuel was a high-energy particle physicist who migrated to Wall Street. He is a lovely, wonderful, and inspiring gentleman. I had the opportunity to chair a conference that he spoke at for OMX in Stockholm many years ago. And this book is really a treat, ladies and gentlemen, well worth reading. And let's also indeed say, well, no IPO-VID would be complete without a short video. And let's go back to that topic of overnight trading. Is Blue Ocean the future of overnight trading? Without further ado, let's look at a 60-minute special.
Meanwhile, in Big World, Blue Ocean is the fastest growing market you've never heard of. Blue Ocean Technologies have led the overnight US stock trading market from 8 p.m. to 4 a.m. in New York time in recent months. A raft of potential new entrants are working on overnight markets to launch in the next year or so. Right now, Blue Ocean is essentially the only overnight game in town, and it's a volume and ground game in key Asian centres already. Watch this space for a fascinating series of 2025 developments. Various competitors are eyeing up the market, but few can launch before the end of 2025 at the earliest, by which time the ground game in Tokyo, Seoul and elsewhere of Blue Ocean Technologies may make it a market leader with a significant moat. For more in Big World, like or follow.
Now, you can catch other videos like that in our canon, both on our YouTube Shorts collection, indeed over at Instagram, where we have all of these videos, as well as TikTok, because we're eminently trendy young things. Ladies and gentlemen, I look forward to welcoming you in the future to come join us at exchangeinvest.com. If you're interested in every possible opportunity in the world of markets and marketplaces, I will be delighted to receive your feedback about the speech that I have just offered, which was based upon my keynote in Nairobi on February the 14th. And also, let me say a huge thank you to the AFM and also to the Nairobi Securities Exchange for hosting us in Nairobi recently for what was an absolutely amazing festival discussing marketplaces and the future opportunities for markets throughout the world. And a particular word of thanks to the chairman of AFM, Pat Kenny, and also indeed the President Chris Sturgis, who indefatigably put together a workshop, which I was delighted to be a part of, in order to manage to help capacity building in Africa, emerging markets and around the world. So that's our show for today, ladies and gentlemen. My name is Patrick L. Young. We'll be back next week with another IPO-VID, something completely different. We're going to have the fantastic, wonderful opportunity to talk to one of our favorite guests once again. And when I get back next week, we'll have Neil in the studio. I'm going to look forward to that very, very much indeed. You have the opportunity, ladies and gentlemen, in the meantime, to have a whole week to think about the world and the opportunity of life and markets. And that's why I, Patrick L. Young, want to wish you a great week in life and markets. See you next week.